So, you're looking to buy a home, or maybe you're just wanting to learn more about where to even start. Well, stick around, we got you covered in the steps to home ownership. What steps should you take before you actually buy a house? The first thing you should do is to get pre-qualified and pre-approved. But what does that mean? Let's break it down. To get pre-qualified, you start by answering some basic questions about your income and debt status. This can tell you what kind of home you're qualified for. Pre-approval is a little different. It also verifies your income and debt status, but in addition to that, it also takes your credit history into account. Based on this information, you can not only qualify for a house, but also be approved for that house. Did you know that getting both a pre-approval and pre-qualification will help you in negotiating for a home? For example, let's say a house is on the market and it gets two buyers. One buyer is pre-approved and pre-qualified to afford the house. The other buyer is not pre-approved and they're just shopping around. The first buyer will definitely bring more confidence to the seller that they'll be able to follow through with the financing of the home. Getting pre-approved and pre-qualified is a very important step that we recommend before buying a home. To get pre-approved, there are 4 things we look at. They're called the 4 C's: capacity, cash, credit, and collateral. So the first thing we're going to look at is your capacity. And what this means is, are you able to pay for this house? When we're looking at capacity, we're looking at 2 things. 1, what do you qualify for? And 2, what can you afford? So to answer this question, we look at your debt to income ratio, or DTI for short. This information will help determine what your actual capacity is to pay for a home. The next thing we're going to look at is your cash. With your bank statement, we're looking to see if you'll have enough for a down payment for a home. There are multiple loan programs that can assist with this. In this cash step, we're just going to verify that you'll have enough for the down payment for the house you're looking to buy. The third C that we're going to look at is your credit. We want to make sure that you have a good credit history. A lower credit score will make it more difficult to get approved for a loan. Good credit is important because lenders want to make sure you have the reliable history of paying back your past credit obligations. Collateral comes into play when you have found a home that you're interested in purchasing. We're just going to make sure that the home that you're buying is worth what you're going to pay for it. So, this is the first step that we recommend in the home buying journey. In our next video in the series, we'll talk about a quick overview of finding your home and the role of your local realtor. If you have any questions about this process, don't be afraid to reach out and contact your local Benchmark branch. We are here to help you.